Good day, Nigerian. And today we are diving into something that has absolutely set the internet on fire and has millions of Nigerians talking, sharing, and frankly quite concerned about what this means for their pockets starting from January 19th, just 5 days from now. We are talking about the announcement that has been making rounds, especially from Moniepoint and other financial service providers, about a 7.5% VAT being slapped on mobile bank transfers and USSD payments. And if you are like most Nigerians who depend on these services daily, you need to hear what we have uncovered about this situation because it affects every single one of us. Let me break down exactly what is happening here, because there has been a lot of confusion, misinformation, and people asking whether this is real or just another internet rumor. The truth is that, yes, financial institutions, including Moniepoint, have indeed sent out notifications to their customers informing them about new VAT charges that will apply to electronic banking services starting January 19, 2026. Now, before we go further, it is extremely important to understand what this actually means because the devil is truly in the details and many people are misunderstanding the scope of these charges. The Federal Inland Revenue Service, which we know as FIRS, issued a directive that clarifies how VAT should be applied to certain banking services. And this is where things get interesting because this is not exactly a brand new tax that just appeared out of nowhere. VAT has technically always been applicable to commercial transactions in Nigeria at 7.5%. But what has changed is the enforcement and clarity around which specific banking services fall under this taxable category. The services we are talking about include things like USSD charges for banking transactions, electronic fund transfer charges, and other fees that banks charge customers for using their electronic platforms. Now, here is where we need to be very clear because panic has been spreading across social media with people saying they will be charged 7.5% on every transfer they make, and that is not entirely accurate according to what the banks and financial experts are saying. The VAT is being applied to the charges and fees that banks levy for these services, not on the actual amount of money you are transferring. So, if you are sending 100,000 naira to your family member, you are not paying 7,500 naira as VAT. Rather, you are paying VAT on whatever service charge the bank charges you for that transaction. For example, if a bank charges you 10 naira for a USSD transaction, the VAT would be applied to that 10 naira fee, meaning you would pay an additional 75 kobo or thereabouts as VAT. However, and this is a big however, the concern that Nigerians are raising is still very valid because even though the percentage might seem small when calculated on individual transaction fees, we must remember that Nigerians make millions of these transactions daily. The cumulative effect of this VAT on the masses, especially those in the lower income brackets who rely heavily on USSD services because they may not have smartphones or steady internet access, could be quite significant over time. We are talking about market women, students, traders, artisans, and everyday Nigerians who have embraced digital banking as a convenient and supposedly affordable way to move their money around. What makes this situation even more compelling is the timing, coming at a period when Nigerians are already grappling with increased costs of living, fuel subsidy removal effects still being felt, and general economic pressure that has squeezed household budgets to the limit. The introduction of additional charges, no matter how they are structured, feels like another burden on citizens who are already struggling to make ends meet. And if you have been following this story with us and finding this information valuable, please take a second to hit that like button and subscribe to the channel because we are committed to bringing you accurate, timely information that affects your daily life, and your support really helps us continue doing this important work. Now, let us talk about what the banks and financial service providers are saying because they have not been silent on this matter. According to statements from various institutions, they are simply complying with FIRS directives and clarifications on tax remittance. Moniepoint, which was specifically mentioned in the widespread notification, has explained to customers that they are obligated to collect and remit VAT on applicable electronic banking services as directed by the regulatory authorities. Other banks have issued similar communications, and the general message is that this is about compliance with existing tax laws rather than the creation of entirely new charges. The government's position, as relayed through FIRS, is that this move is about harmonizing tax collection and ensuring that all taxable services are properly captured within the tax net. They argue that Nigeria's tax-to-GDP ratio remains one of the lowest in the world, and broadening the tax base is essential for funding government operations and development projects. The official stance emphasizes that this is not a new tax, but rather proper implementation of existing VAT legislation that was perhaps not being consistently applied to these banking services before now. But here is what many financial analysts and consumer advocates are pointing out. The effectiveness of any tax system depends heavily on the trust citizens have in how those taxes are being utilized. When people see poor infrastructure, inadequate public services, and limited returns on the taxes they pay, additional charges become much harder to accept, regardless of how they are justified technically or legally. This is the conversation that many Nigerians are having online and in their communities, questioning what value they are getting for these taxes and whether piling more charges on already burdened citizens is the most effective or equitable approach to revenue generation. For those wondering what options they have, financial experts are advising Nigerians to become more strategic about their banking transactions. This might mean consolidating transfers to reduce the frequency of charges, exploring banking platforms that might offer lower fees, or in some cases, considering alternative payment methods where applicable. However, the reality is that for millions of Nigerians, these digital banking services are not luxuries, but necessities for conducting daily business, paying bills, sending money to family members, and participating in the modern economy. The broader implications of this development touches on financial inclusion, which has been a major policy focus in Nigeria over the past decade. The country has made significant strides in bringing more people into the formal financial system through mobile money, agency banking, and digital platforms. Any charges or barriers that make these services more expensive could potentially reverse some of those gains by pushing people back towards cash-based transactions or informal channels. This is something policymakers need to seriously consider as they balance revenue generation goals with financial inclusion objectives. As we watch this story develop over the coming days and weeks, it will be important to see how Nigerians respond, whether there will be any pushback from consumer groups, and whether the government might consider any adjustments based on public feedback. What is clear is that this conversation about taxation, digital financial services, and economic burden distribution is far from over, and it represents a critical moment in Nigeria's ongoing journey towards building a more inclusive and sustainable economy. Stay tuned to this channel as we continue monitoring this situation and bringing you updates, analysis, and most importantly, the voices of everyday Nigerians who are directly affected by these policies. Your engagement matters, so drop your thoughts in the comments below and let us know how this affects you and what you think should be done about it.